before we start, I would like to summarize some context of our discussion, because we have actually two disruptive technologies on the table, which is blockchain and AI. They are on different levels of adoption, but I think we generally agree that there is a great power, great potential of these two technologies. We have seen this great presentation before, so I think we definitely agree that we should use it for a better financial world. From the other side, we have some global trends, some economic problems that impact our entire life, actually, our financial stability, like energy crisis, Ukraine war, or high inflation. So we definitely need to revise our financial system, and we need a reliable, efficient, and system that address our needs. So maybe it's time to reimagine the money, to look for some new opportunities, to create a system where consumer really control its money and own its money, yes? So, Wojciech, I would like to start with you. You're the first on my list. How do you think should future payment system be blockchain-based, and why? And additional question, do you think banks and financial institutions will really use the potential of disruptive technologies, or rather they will try to maintain a status quo? How do you think?
So quite a lengthy intro and even longer question. I hope we can get engaged in the discussion. But I suppose the first question here is, from a payment system perspective, what are the pillars of the payment system? What payment system needs to stand on? So obviously we've got processing speed. You don't want to be stuck at the point of sale, not being or waiting for a long time for the transaction to go through. And from this perspective, obviously we've seen a huge development in blockchain systems. Visa and MasterCard, I think for both networks, it's around 5 to 7K transactions per second that you're able to process. And what we see in blockchain systems, we've got BSV with, what is it, Patrick, 100,000 transactions?
We have seen tests with 500,000 already.
All right, so 500,000, it's way more than 5K. We've got Polish blockchain, Aleph Zero with 100K that in tests we're going through. We've got Matic and Solana. Solana obviously claims 700K, but we've seen it going down with much lesser loads. So the second pillar for the payment system is availability. Again, there is no worse case to imagine than being stuck at the gas station, not being able to pay, nor leave, right? When I was running a card transaction processing business, that was our worst nightmare, getting phone calls from customers being stuck at the gas station. Yeah, they're not very likely to take lightly the fact that the network is down. Again, going to blockchain technologies.
But what about banks?
Yeah, but
Not important.
Yes, of course.
Fortunately, from a payment perspective, you've got stand-in processing that takes care of bank systems going down. At least from a payment perspective, you still are not going to be able to get into your bank account, which will definitely end up in newspaper. Anyways, coming back to blockchain.
But one comment.
Yes.
Okay. Regarding this case with petrol station, etc. First of all, it still happens, unfortunately. So it still happens that you've got such situation that you want to pay, but you cannot pay. But regarding banks, as I remember, 80% of such situations that simply you cannot pay, but when you want to pay, the reason is very basic. insufficient balance. Yes, so you simply don't have enough money on your account, and this is.
I don't think technology can solve this.
Exactly. But it touches banks, no doubt. We should have more money as a solution.
Well,
You can take credit.
or you can get engaged in, developing blockchain or AI technologies, and maybe you're gonna make enough to settle the balance.
But Wojtek, I still repeat, do they use technology or not? How do you think?
Banks?
Banks, financial institution.
Well, the banks especially, I think, are quite, they're quite regulated. So it's a difficult subject for them, and they're usually large institutions that are slow in implementing modern technology. And from a risk perspective, cutting edge technology is always risky for banks. So yeah, they are slow in this. That's why we see fintechs and other, tech-focused companies appearing and offering financial solutions. But over time, yes, we've seen, the Polish market. I think it's actually quite a good example where quite a few nice, innovative technologies have been developed. I'd love to give an example as Bleak, which is
Yes.
quite a unique initiative. 6 largest banks came together to create national payment system. Obviously, I would love for Bleak to be implemented wider, and having banks as shareholders gave 70% to start of the Polish customers being able to utilize the payment system. But on the other hand, it slowed down development because sometimes the initiatives of payment systems might not be to the liking of their shareholders. So,
Yes.
did I answer the question?
Almost.
You open a lot.
Almost.
You opened many others. May I just continue?
Yes. So
Yeah, maybe quickly on me. So my name is Patrick. I represent the Swiss family office, a single family office called Fairway. And we have been investing heavily in technology, disruptive technology, and with a strong bias in blockchain. And I personally started my career in investment banking. I was then also doing consulting for the large wealth managers in Switzerland. And then I worked at the hedge fund. I did a lot of private equity transactions, cross-border payments were involved, a lot of structuring. And payments for me in general and kind of exposure to banks as service providers has been throughout my professional career. And I have a lot of thoughts about it. Personally, I'm also engaged in a fintech that provides digital banking services to East African SME companies. This is a region where the banking landscape is, again, entirely different, much less developed. And nevertheless, this is a region where people started leapfrogging, right? They adopted mobile money very quickly. They went from cash payments to mobile payments. And I think it's regions like this where we also will see the adoption of digital cash CBDC solutions earlier because they need it, right? They're open to it. What we have in contrast, in taking the example of Switzerland, we have real-time payments via mobile solutions. We provide by the banks, however. We do have very efficient and stable solutions. So for me, it's much less likely to switch. I feel banks, they do a service to society by providing trust, right? Stability, security. And so I also see this sector less likely to be a front runner in adoption. There's regulation as well. There's a lot of fear based on the last century where there was many penalties because of taking excessive risk and so on. But still, there's this fear of the regulator in general. And I recall working at Citi Investment Banking, the CEO Mike Corbett back then said to us in a town hall that the regulator is the biggest client of the bank. So just this demonstrates the perspective that banks have today. I speak a lot to banks. Again, I see them slowly adapting to the need, but they see more of a profit opportunity by providing access to digital assets, right, for investment purposes. They have not really yet explored the utility that the technology provides. And often they do this through external service providers, right? So they connect to some digital asset exchange and let them basically, handle all the technology part and also take the risk. But they are able to provide the service to the clients. I personally would like to see that middle and back office start exploring what efficiencies and also what additional kind of transparency, auditability aspects they can gain. And I'm convinced that over time the regulator will better understand that we are really looking at a ledger, right? An immutable data ledger. I mean, it's the auditor's wet dream, right? And once they understand how they can use it effectively, and this is where services like Gatenox, coin firm, right? To name another company that is associated with Poland, provide excellent services. This is companies that we heavily as a family office look at because we believe that as the understanding with regulators and institutions grows, they will almost make it mandatory to use such services. Yeah, last but not least, we still like the aspect of peer-to-peer electronic cash, kind of the original idea of the Bitcoin white paper. And the reason is not for how it's kind of portrayed right now across media and in the whole scene as a kind of alternative to the money as we know it today, as an alternative to like gold and to banking. I've heard all kinds of nonsense. For us, it's technology. It enables very efficient transfer of value. And value today is not just monetary, it's really data, right? If you make a payment from my bank to Wojciech's bank, it's a data transfer. No one brings cash, right? And so data has value in many forms, right? Be it, I don't know, industrial IoT signal, login information, GPS signal, whatever it is. And this technology now, because of its efficiency, allows you to put a price tag on data, no matter how small. That's new. That's innovation for us. And I think the blockchain needs to scale massively. We have just mentioned some numbers. I think it needs to do billions of transactions per second because we're not just talking peer-to-peer, like person to person, but IP to IP or person to machine, right? And there will be a lot of interactions that will be required to handle many transactions.
Patrick, what you're talking about, scaling to billions, obviously, if you envision single blockchain covering all the use cases, right? But the other vision might be development of ecosystem of interconnected blockchains dedicated to specific use cases. And back to your point on use cases and banking industry working with blockchain technology, JP Morgan utilizing blockchain for cross-border transfers. I believe this is actually in cooperation with Visa. In many countries, especially in Europe, we don't have a problem of instant transfer of money between the accounts. In Africa, we've seen development of payments through SMS system, right? So telecoms went first and implemented it. In Asia, on the other hand, we see payments through QR codes, WeChat, etc. That's also something new. And if you take a look at Musk's purchase of Twitter and the plans to make it, how do they call it, super app, where you can pay and your whole life can sort of circle around it. I think a lot is happening from a technology standpoint. In payments and
I take the Twitter example. Like him or hate him, Donald Trump was kicked off Twitter, right? And he had 98 million followers. That's an asset. Oh, yeah. And someone just took it from him. Again, it's not a fan of the politics, but it's crazy, right, that this is possible. And so what I see the risk of solutions like Elon Musk plans it, or even Mark Zuckerberg with Meta and Libra and all these efforts, is where they control your data. It's not your money. It's just, an IOU. It's like with the banks. And if the bank goes bust, hopefully they save it so you get your money back. Otherwise, you have a problem. And it's the same with, points you collect at the local supermarket, like loyalty points. It's an asset you own. But if the supermarket goes bust, what is it worth? Right? It's a centralized database. Sorry, one more last point. So coming back to efficiency, for me, the whole idea is about allowing innovation that hasn't been possible before. Micropayments, being able to price something of an infinitely small value and settle in real time. One of the innovations for me of Bitcoin per se is the UTXO model. It means that all the information that is required for a transaction is between the receiver and the payer. No one else is required. No intermediary is required. And it allows for infinite parallelization, the same way cash parallelizes. And this adds to the scalability ability of the system.
Excuse me, I would like to comment on Bitcoin, because there is one advantage yet, I would say. It's a limited supply of Bitcoins, don't you think?
I have a strong view on this, but
you
go ahead first.
So, if you refer to CBDC or other currency and central banks, I don't know if you ask yourself somewhere, who controls your money? Is it really you or somebody else? Yeah. Why is money devaluating? Yeah.
So every Bitcoin has 100 million Satoshis, right? And in every transaction, there's input and output fields. And you can write data in this. As in, you can include a photo file, a fraction of a video file. You can include a monetary value, right? And the monetary value can be 100 billion on a Satoshi. So I think people underestimate, this is a token system, right? That is registers data on a ledger. And you can assign any kind of data. So I think, I believe that we'll actually see CBDCs being issued on the Bitcoin data ledger.
Wow.
Yes, but it needs to be scalable.
Revolutionary theory, I would say.
Well, let's see how it evolves. And very last point, sorry, the reason banks are so keen on kind of creating their own so-called blockchains, really like permissioned distributed ledgers, is because they're more comfortable. And it's a very similar tendency that we saw in the early days of the internet, whereby people created their own intranets, right? And then they say, well, but how about security? It's a permissionless ledger. But the reality is, your e-banking solution today is also on the public internet, right? So you can encrypt data on a permissionless ledger. Right, it's very much possible, and I think we'll see versions of a permission type ledger on a permissionless rail, so to say. And yeah, so I'm very much a fan, obviously, of permissionless versus permission.
Okay, Szymon.
Thank you. No.
Finally, you can.
But first of all, a few thoughts regarding what Patrick said. So first of all, banks. Truth is that banks are huge. This is one thing. Second thing, they are very regulated. So for banks, I believe it's simply impossible to be very agile. Simply impossible because of regulations, because of size, because of establishment. It's simply impossible. But on the other hand, I believe that it's not like that the future of banks is to be only back office for fintechs. I believe that banks, even in 5, 10, 15 years, still will play important role and still very often will be responsible also for relationship with clients. But to do it, simply banks should, and they are have started to doing this, they have to simply start partnerships with smaller companies. Truth is that very sophisticated solutions, so banks are trying to build sophisticated solutions. But for banks, it might take 2, 3, 5 years. For fintech, the same solution can be built within less than 1 year. So from my perspective, for banks and fintechs, they are, okay, they can be competitors, but for good, both of them, if they start collaborate and simply they will be based, and this, their benefits will be based on partnerships, it should fly. And we see many examples currently that banks are trying to collaborate with fintechs. The truth is that sometimes it's more successful, sometimes less. Of course, Blick is obvious example, but we've got much more examples regarding, around some products like, I don't know, micro factoring, for instance. Yes, several banks tried to do it, didn't success. They started collaboration with small fintechs, even in Poland, and more or less they succeeded. Yeah. So to cut long story short, I believe that there is the future for banks, but simply they have to a bit adjust their business model, operating model, and simply they have to collaborate broader and broader. So this was one comment. Great. Second comment, Bitcoins. They are limited in number, but please take a look. now it's feasible to buy some piece of Bitcoin. So it's not truly truth that Bitcoins are limited. Cash is also limited. We simply get around the world, simply we've got more cash than Bitcoins, simple like that. But in general, all resources are limited, and the truth is that somehow we live with that, and somehow we take care of it. So I'm not afraid of that. Second comment. Okay, before third comment, so question.
I do not agree with you.
Oh, so please.
Central bank can issue money.
Mm,
Infinity, actually, yes.
okay.
You do
yes,
not have
yes,
any
yes
control
and
of
no,
this,
yes and
yeah?
no. But
Of course,
but you
it's
know
more
when they
complex, I agree.
exactly
but
when they produce cash, we've got we see
there is
situation now.
no
Inflation
regular-
20%. Yeah. So truth, but you know each action has some obvious thing, some reactions, other activities. So
Yes.
as you said, it's much more complex, I believe.
Exact.
Okay, so
But don't you think that if we would have such system that there is a democratic way and nobody controls your money, nobody controls the value, you have this option, it would be great or not?
I believe that democracy is the best solution that we've got, but it's not optimal solution. So this question, answering your question, it would be good, but still, when such concept will grow, finally we need some regulations, because it's not like that all actors in such environment are fair. It's not like that they are honest, etc., etc. Always there are some actors, people, whatever, who
Markets should regulate,
exactly
Markets.
yes, but you know,
not institutions.
Apologies.
The market regulates Bitcoin and Ethereum's prices too, right? The point of central banks is that they can make these manual changes so as to keep prices stable.
True. Yes, you're right. But you know, it's a bit okay. From my perspective, it's a bit theoretical discussion, yeah. Because many years ago, we had more or less, you know, economy that wasn't, you know, controlled by any national banks, etc. And finally, we had crises. Yeah. So it's personally, I don't believe that there is one perfect solution for everything, you know, and simple like that. There are so many factors, there are so many variable changes that simply, to be honest, it should be somehow, maybe not controlled, but somehow regulated. There should be, so from my perspective, if we talk about general solution, global solution for everyone, some regulations are needed.
Agree. Completely agree, yeah.
Why we have regulations in financial sector?
I think there are going to be interesting panel in few hours about this, but to protect consumers, that's pretty much the answer.
Protect from what?
Yeah, that's a good question. To protect from what? From themselves.
From themselves or from
Bad guys as
Third
well.
parties that
Exactly.
from somebody who
Exactly.
is not
As honest, as fair as majority. Exactly.
who act in an unfair way,
But
and we don't trust.
it's not the trust.
It's based on trust. That's
apologies.
correct. So the banking industry is based on trust.
But this is another topic, yeah. But
And my point is that we are mainly focused on the crypto. Okay, let's go there. So cryptocurrencies are there because we don't want to rely on the trust. I don't want to rely on trust to make the transaction. So that's why I'm using crypto.
may I?
I'm
or-
not sure if that's the only case. You know, obviously, it has been at the beginning idealistic view. You know that you want to build a trustless network where you don't need to trust the other party. But you know, from a perspective of let's say money laundering, when we go to the trustless environment, at some point there is a lot of opportunities to overuse this system, by bad actors, right? So sooner or later, we need to arrive to solutions where you need to be accountable for what you're doing. So identity needs to be connected to your transaction. Obviously, this identity doesn't necessarily and shouldn't probably be publicly available to everyone. I don't think as a society we're ready to sort of open our books and for everyone to know how much you spent where and what did you buy. But there are solutions, and this is probably right now the biggest challenge that crypto industry or blockchain industry is trying to solve. Identity and encryption of transactions. So Patrick already mentioned it. You can build systems where you still rely to some extent on a trustless environment. You still have environment where it's distributed, but at the same time you make sure that bad actors have doors maybe not necessarily entirely closed, but to some extent. You wanted to add something?
Very briefly, put it straightforward. We regulate something, we regulate financial system to avoid 0.001% of cases in general, because these 0.001 cases are very negative. Thanks to them, you may have crisis. Thanks to them, you may, not only you, but thousands, billions of people might lose their money, for instance. So that's why we regulate. Of course, if we assume perfect environment without any bad people, yes, we don't need contracts, we don't need regulations, we don't need lawyers. But such some concept, okay, it's only concept. It simply doesn't exist. That's why it's regulated, to avoid crises and to avoid these bad cases.
Yeah, I think regulation evolved, right? We as a democracy, as a civilization, we created rules over decades, centuries. And there was a reason why this was created. It's not perfect always, I agree. But I think these rules are important. And I always struggle with the very kind of crypto-anarchistic views that think a system outside of law will be any better. In Switzerland, we have a limit. I think it's 10,000 Swiss francs. If you go beyond this in cash payments, they have to do KYC on you and check for anti-money laundering. And it doesn't matter if I pay, I don't know, in gold, or I pay in fiat, or I pay in Bitcoin. Right? So why should this system be treated any differently? I think the rules as they exist already should apply also to the digital asset industry, and it's really just a mechanism. It's a mean to transfer value. And again, it can be not just monetary value. It can be data that is exchanged. Quickly on the point of centralization, BTC. And it's a public ledger, everyone can check, is currently dominated by two miners. It's two organizations, right? How difficult do you think it is for a U.S. court to go, and I say specifically U.S. because they are U.S. territory, and present a court order to two companies and ask them to actually seize, confiscate certain coins that have been involved in illegal transactions? There's 4 or 5 maintainers only. To the GitHub Raw story. Have you ever checked who pays those maintainers? I can tell you, one of the guys is in Switzerland, right, and he's paid by Bitmain. It's a Chinese mining company. Isn't this a problem? Like, how are these people incentivized, right? I'm just saying, if you look behind the curtain, sometimes it's not as decentralized as people, want to present it to you. It's not as different of a system than banking actually is. And by the way, Blockstream, as a company that heavily supports, some of the maintainers, is sponsored and paid also by MasterCard. Well,
Okay.
So are we now asking
Patrick,
MasterCard?
I'm sorry, but we have limited time,
Yes.
yes? We have the question, yeah?
You can do it, yeah.
Okay.
Specifically to Szymon and to Lisa, you guys are working to stay on the leading edge of transactions, and you guys can offer transactions very cheaply, much more cheaply and more quickly the crypto networks are getting there, some of them, to where you can make transactions both cheap and fast without a third party. So do you think it might be possible that solutions like the largest scale, pushing the boundaries solutions could start emerging on those decentralized networks, or do you think it's going to be a long time while Visa and MasterCard are still competing against?
Difficult question. Do I have 2
Yes,
minutes?
okay.
Okay. So, first of all, a few years ago, really Visa heavily invested in blockchain. Not in blockchain itself, but in works on blockchain. We've got huge team, global team, and I can assure you I know it because I even lost one of my consultants. He preferred to join this team to work on great crypto. And this team for 3 years is working only how Visa should adapt this situation. Blockchain, crypto, CBDC. The truth is that last year changed a lot because in the last year, as you know, we had several bankruptcies on crypto market, and the truth is that it was some sort of huge signal for us that we should maybe not keep away, but simply we of course should support crypto business as a player. But more, what we do, we collaborate with more than 50 crypto platforms, but our support or our collaboration is limited to offering and implementing to those platforms our authentication system, simply based on plastic cards or virtual cards, whatever. But to cut the story short, thanks to this collaboration, if a user of crypto platform wants to withdraw money, such person may spend this money thanks to our virtual or plastic cards. So regarding crypto business, we are really limited to simply bring a value to final users, and we do not engage in any other way in this business. Why? Because Visa, MasterCard, so in general, card organizations really are what we do is very sensitive, so we want to focus only on those areas which simply are regulated. Crypto, as you know, is not regulated. So this is crypto. Now the second part, CBDC, for instance. Because when we, let's say, maybe not left side, but simply when we understood that crypto is something a bit not, let's say, not perfect for us, then we focus 100% on CBDCs. And the truth is that in this area, our engagement is huge. As you know, CBDC now is tested by central banks of countries responsible for 95% of global GDP, one thing. And second, but on the other hand, as you know, CBDC already has been launched by a few countries in, as it was mentioned, in Africa, not in Europe, not in the US. Why? First of all, from our perspective, why Visa is so strongly supports CBDCs? Because we see in CBDC as a solution to, let's say, somehow mitigate some inequities in markets where we've got undevelopment of financial services. Like exactly, Africa is a good example. So simply in those countries which simply are not very mature regarding financial services, because in those countries you don't have thousands of branches, you don't have great mobile bankings, and maybe you even have great mobile bankings, but you don't have access to internet in many areas. That's why CBDC can be solution for them simply to support development of financial services across those countries. And we really support that. How? In two areas. First of all, my domain, consultancy. So we collaborate with or national banks or certain banks simply to prepare strategy approach how we want to enter this, let's say, business, how we want to enter CBDC infrastructure solutions products. So this is my part, let's say, consulting, but the second part that is driven by my colleagues from product division, in Visa we also developing some sort of connector which should help, should enable conversion of, let's call it currency from blockchain to fiat currency or any other. So this connector, our assumption is that this connector will allow to convert funds from any blockchain platform to any other fiat or any other or CBDC, whatever currency. So this is what we focus on. So we focus more on our key domain. So let's say maybe not regulation, but coordination of payments across world.
Okay, thank you, Szymon. I think on the end, just 2-3 sentences. What is the most important thing in the future finance world from your perspective?
Well, future finance, I'm not sure, but I had this thought about the banking industry that was brought a couple times, so and also Visa, MasterCard. So the traditional finance is based on trust, and that has been going on for years. And obviously, you know, development of this trustless solution is something that was quite concerning for the traditional industry. So what we see is traditional financial institutions, like mentioned earlier, JP Morgan, Visa, MasterCard. I think I've read that together Visa and MasterCard have over 400 patents in crypto space. So they do seem to be quite engaged. I think
Just to summarize.
To summarize, I think we're gonna see the change happening. The newcomers are gonna appear on the market. It's not gonna be fully decentralized, in my opinion. It needs to be to some extent centralized. But the institutions, traditional institutions, need to change, need to adopt this technology to stay relevant.
Great, Patrick.
I'll make it shorter. For me, it's micropayments. I can already transfer $1 million, and if I buy a house in Switzerland, and it's often $1 million, then I still use a bank. It provides a service. But what I cannot do today is send a fraction of a penny to Wojciech for a microservice he provides me over the internet. That's the missing part to complete the internet.
Great.
So 2 things. First of all, what I believe that in 10 years we will have several systems of payments. So we still have typical ones, CBDC, blockchain, a few others. So this is one thing, and in my opinion, we simply have to adapt ourselves to that. First thing, and second thing, communication and information. Because if we want to go further, if we want to introduce new solutions around blockchain and whatever around that, people here more or less know what we are talking about, but the truth is that 99% of society doesn't have any idea what we are talking about. And in this case, I believe if we want to push this forward, if we want to introduce new solutions, people should understand what benefits they've got thanks to that. So this is how I see as important to my thoughts. Thank you.
Thank you. Let me summarize. We do not expect a revolution. It will be rather evolution, as I understand correctly. And key thing is optionality, I would say, yes? So we will adopt different forms of money, different digital assets, and market will regulate. We'll see what happens, yes? Okay, thanks a lot.
Thank you, guys.